Hello, I'm Juliet Schooling Latter, Chelsea's Research Director, and I'm here today with Alastair Mundy, Manager of Investec Cautious Managed and UK Special Situations Funds. Alastair, you're widely referred to as a contrarian investor. Indeed, you head a contrarian team at Investec. Could you please define contrarian investing for our viewers and how that translates into stock selection?
Contrarian investing is all about looking at out of favour stocks which other people have lost interest or hope in ever recovering. The way I always think of it is looking at other people's dustbins for buy ideas. And typically what it means is we have to wait a long time for shares to fall, and then we have to buy them when there seems to be little hope of recovery, and typically our holding time is quite long. We typically hold shares for about 3 to 5 years.
Your Cautious Managed fund invests in both equities and bonds. Could you please tell us your view on these asset classes and how the fund's currently positioned?
Well, equities have had a fantastic run over the last 4 years, and I think it's impossible to be nearly as bullish about them now as we were in 2009. I think other investors are getting more excited because interest rates are very low, and perhaps central banks are encouraging investors to move into equities because other assets look so unattractively priced. But we don't want to be bullied into buying equities because they look cheap relative to other asset classes. We want them to be cheap on their own merits. So we're not as convinced about that, so we've been taking a little money out of equities in recent months. However, bonds have got to very, very low yields, and particularly long-dated bonds, those maturing in 15, 20 years' time, to us look very expensive and look very vulnerable to higher inflation. So we've got a very, very defensive, prudent weighting in fixed interest stocks. Short-dated, where we have got slightly more maturity, we've got index-linked holdings, so these stocks will go up with inflation if held to maturity. And we've also got some Norwegian government bond short-term fixed interest holdings as well.
Last year you started to invest in Japanese equities, which was a very good contrarian call. What's the next sort of contrarian bet? Perhaps gold shares?
Yeah, I think one of the things contrarian investors got to be careful about is not to be too contrarian all the time. Sometimes there aren't such obvious, in inverted commas, ideas. You have to be very patient and wait for the next really good one. But yes, gold miners have been really weak in the last year, and even gold bullion itself. And just recently we've been buying gold bullion. But we still think having an exposure to gold is very, very important in this world, because we believe we're living through a fantastic financial experiment being run by central bankers, and the outcomes are really unknown and could be quite extreme. So the fact that gold has moved so significantly out of favour this year, I think is of great interest to us, and we have been increasing exposure to that asset class, yes.
You also run the UK Special Situations Fund. Some other UK contrarian investors have been sort of caught out with sort of bank shares, for instance. How do you know when a contrarian view is simply the wrong view and when to cut your losses?
Yeah, it's very important in contrarian investing not to just keep on buying and buying all the way down just to show you the toughest guy in town. I think the most important thing for us is the thesis that we began with for buying the shares still intact, or if we had to continually change our story to convince ourselves the share price was cheap. And I think a lot of that really is determined by, is our fair value for the shares exactly the same or pretty similar to what it was to begin with, or as the share price fallen, has our fair value fallen with it, which suggests that we're really not in control of the situation. So yes, we continue buying some shares when they fall, but only if our original story still remains intact.
Where do you see the opportunities today in the UK market, and how is your UK Special Situations Fund currently positioned?
Well, we're quite defensively positioned on UK Special Situations. We've got about 11% in cash at the moment. As I say, the market has run up very strongly in the last 4 years, and the number of new individual opportunities we're getting are few and far between. What have we got on the portfolio? The stocks that still are perhaps in general most attractive are the larger companies, which have been left behind. So we're still quite heavily weighted in companies such as Unilever and GlaxoSmithKline and HSBC, where we think there's been much more attention on mid-cap companies, which are typically seen as more exciting and with faster growing futures. And we think these larger companies with strong balance sheets and good dividend yields could perhaps lead the way over the next couple of years.
Thank you, Alastair.
Thank you.